Hello, everybody, and welcome to another episode of the Business Over Beer podcast. I am your host, Ben Surratt, and today I have a blast from the past. Guest, who are you?
This is Todd Brefeld with Nexa Mortgage.
Todd. This is actually take two of this episode because the first time we had audio issues, but now you sound freaking amazing, bro.
Yeah, we had a few tech issues there back then, but we
Yeah.
figured it out. We figured it out.
Yeah, yeah, we did. So, just real quick, Todd, talk to everybody of who you are. We're not going to get into the questions, but just who you are, where you're from, and what you do.
Okay. So, Todd Brefeld, I work at Nexa Mortgage. I've been a mortgage lender here for probably going on about 25 years. From Chicago, started my career there, did lending in Chicago for about 10 years, and then had a little walkabout, lived in Hawaii for a couple of years, lived in Japan for 5 years. And then when we moved back, 2014, I got back into lending, and I've been in lending here in the Pacific Northwest for the last 11 years.
Yeah, wow. Yeah, and you and I met at a mortgage company, actually.
Yes.
And you were like a little bit of a mentor to me, a little bit. Uh, that's when we met when the rates were kind of good, and then and then the rates took a turn, and
Yeah. Well, now that same mortgage company is somewhat
gone.
defunct.
Yeah,
Yeah.
gone,
Yeah.
gone.
As a lot of them are. That's what
Yeah.
happens in this industry.
Dude, I'm so glad you came back on. I'm so glad that we're doing this again. We'll get into all that. I'm sure this is going to be an episode where people want to know about the mortgage stuff. But before we get into all that, um, I I was telling you before the episode that I'm kind of dieting. My family's dieting. And Jared, so Todd, Jared is a dude. He owns or he has a platform, and it's called it's Dive Bar, Wisconsin Dive Bar Reviews. It's awesome. He's a cool dude. And I saw he reviewed a Pabst light beer. Like it was a
Ooh.
yeah, yeah. So I'm like,
Sounds like a
well,
hangover in a bottle.
so so I went one better. So I'm
Yeah.
doing the Miller Extra Light
Yeah.
beer, and I will review it because I haven't had one before.
Well, I'm a proud graduate of the higher learning institution, University of Wisconsin Stevens Point.
That's
So I
right.
should really have a point beer, which, by the way, is turned into sort of a microbrew, and the
Yeah.
quality of their beer has gotten significantly better.
Yeah.
But it's hard to get out here. So I have a couple of choices. One,
Okay.
it's a work day. I'm
Yep.
all business. So right now, can you see it's a Starbucks? But once things calm down, I was telling you I had two choices. Depends on the mood. If I'm feeling dark, I got
Ooh.
there we go. Pelican Brewing export. Let's see here, export stout, and then I also have. I won't put it to the camera, but a Fremont Golden Pilsner. Are you familiar with the Fremont Brewing?
Oh yeah.
Yeah, they put out
Uh-huh.
a good product.
Yeah, they're
So
really good.
we'll see how the day goes, depending
All
on
right.
which
Well,
one I
I'm gonna
drink.
try mine now. I'll do a quick review of it. So
Okay.
let me see if you can hear this. No, probably not. All right. Extra light Miller, 2.8% alcohol, 64 calories. Isn't that crazy, dude?
It is. You're just waiting for the day when you get back to a Miller High Life?
I do have some High Life in my fridge. Dude, that Pelican beer that you have, the
Uh,
Tsunami,
yeah,
it's so good.
yeah. I do like myself a stout too. Everyone thinks it's heavier, but it's really not.
Hmm.
I'm drinking my coffee for these hard-hitting questions that are coming.
Um, so if I do a review on this,
Mhm.
it tastes like a Miller. It does. It tastes like a High Life. It's lighter. I mean, it's like water kind of, but
Yeah,
it's good. All right. Todd, so yeah, where should we start? Should we start from how you got started in the mortgages? That's always
sure.
good. So how did you get
Yeah.
started in mortgages?
Well, and I'm gonna date myself here, but way back in the aught '90s, early '90s, I graduated from college, And it wasn't the best job market, put it that way. So for about a year, I bartended and did various different jobs. And then I had a couple of years stint where I was selling wet and dry lab equipment to places like Motorola and different things. Really not in my field, but pretty cool job. But Motorola was my main client, and they were very slow on the uptake with the digital phones. They were sticking with analog. They're like, we're going to stick with analog.
I remember
And
that. Yep, I
yeah,
remember that.
and they dragged their feet so much that now they're probably about a third of the size. And what was happening, this place called Harvard, Illinois, they were building a campus of Motorola factories. Each one was huge. I don't know, maybe 250,000 square feet, and they were building 8 of them. And they built 2.
Dang.
Yeah. They built 2. Things started to tank, and those 2 are still there. And I don't think they're owned by Motorola, but they basically said, like, we got to stop the spending. So right when that was happening, and that wasn't necessarily the reason that I left, that my main client was shrinking drastically, although that didn't help. It was just, there were limits to the income I could make. I did not feel like I was being challenged. Like I had done it for a little while and I just wanted something new. So I entered the world where there's really no challenges, the mortgage industry. It's all just milk and honey, as you know, my friend. Never a bad day in the mortgage business. But I started doing it. I loved it. I was obviously out of the industry for a little while when I was living abroad, came back, and I'm like, this is what's in my blood. This is what I love to do. So I've been doing it ever since.
Well, so first of all, the Motorola StarTAC, right? That was the flip
Mhm.
phone.
Yeah.
The Motorola
And they also had
StarTAC.
their I think lead seller was the Razor,
The Razor back in the
which was
day,
not a
yeah, for sure.
yeah, not a flip phone, but that was their big seller. But I believe those are analog phones. Like I said, they just
Yeah,
waited too long and everyone kind of
passed
flew
them
past
by.
them. Yeah,
Yeah.
yeah.
Um, so talk about your a little bit about when you were abroad. So when you were in Japan, what brought you there? Like, why did you go there?
It's a good question. So we were living in Hawaii. We decided to live in Hawaii for a few years.
Because
And
your wife is from Japan and you met at college, right?
yeah, no, we met after college, but we met in Chicago.
Okay, gotcha. Okay.
So we were in Chicago when things were going so well. I'm like, let's move to Hawaii. And we did. We lived on Oahu for about a year. We lived on Maui for about a year and a half. And I loved it. My wife also loved it, but we also had our first son when we were there. And Maui's great, but it's somewhat isolated. She didn't really have a support network. We obviously didn't have any family, and all the friends we had were obviously people that we knew for like the year that we had lived there. So we didn't have any super deep friendships, like
Yeah.
those lifelong friendships.
Yep.
I mean, we did over the phone and the internet, but and it was just she was feeling more and more isolated, and it is pretty. I mean, as beautiful as it is, there's especially when you have a newborn. It's
Oh yeah.
I got where she was coming from. So she kind of she over a period of time was like, you always said you want to live in Japan. We could move to Japan. And yeah, after about 6 months of that campaign, I was like, let's do it. And then probably took us about 3 months to get all our affairs in order, and we were off to Japan. And we lived there from January of 2009 till April of 2014. So we lived there for 5 years.
Whoa, dude.
Yeah,
What
yeah,
was
it was
that
awesome.
like? I mean, what was was it I mean, it had to be some sort of a culture shock, but they seem to be very, and I've, that's a bucket list for me. I've always wanted to go to Asia and especially Japan. Um, but what was it like there? Because was it a culture shock? But they seem to be very forward thinking. Um,
It wasn't. It was for sure. It wasn't as far as adjusting to the people because they're very accepting. So that went pretty seamlessly. For me, so I'll give you an example. We had a larger 3-bedroom apartment, and it was about 900 square feet. Um,
whoa.
Not that I'm used to living in huge places per se, but that was. And then we had 2 boys and us, and that was one of the larger apartments. The other thing, this is going to sound very American creature comforty, but I don't know if you have that favorite love seat or sofa or whatever else. They don't really, You sit on the floor, you eat on the floor. I mean, obviously people take their shoes off and it's very clean, but like, and people might have a sofa, but it's usually even the nice ones are kind of something that you find in IKEA.
Yeah,
So for me, just not, I mean, and obviously I adjusted. I found ways to relax, but just not having like, having, you know, having those kind of creature comforts. But
sure.
I mean, I feel like I adapted fairly quickly and I absolutely loved it. So
Did you
it
did
was
you
great.
karaoke?
Yeah, they karaoke right there. I mean, they really do. Yeah, we would do it on occasion. We do it occasionally now because my wife misses it.
Yeah.
And then I sing a song or two, and she doesn't miss it as much for some reason.
There's a place in Portland that's probably closed by now called I think it was called like
I know what you're talking about. I think
Soundboard or
that's the place that we go to. It's been probably about 6 months, but is it
yeah,
Northeast?
yes.
Yeah,
And
yeah,
that you have your own little room
yep,
and I guess that's similar to what it was like in Japan. Like you have your
yeah,
own little room with your friends and you all karaoke together or whatever.
yeah. That is the Japanese style because here normally I think of karaoke and people are doing it, to the whatever crowd is in that bar or in that venue,
Yeah.
and it's a little daunting because there could be a lot of people. This is whoever you invite to the room. You have the room for an hour or two, and they'll serve you food and drinks and
Yeah.
whatever you want. But yeah, that's similar style.
Yeah. Anyways, that place is awesome. It's been years since we've been there,
Yeah.
but okay, cool. So you moved back from Japan, and did you get right? What got you back? This is what I love about it. So, what brought you back into mortgages after you left? Because you were there for like the 2008, right? You
Yeah,
were you
yeah.
were in it
Well,
with
that
that.
was that was a silver lining, and it was a lot of the timing because you had say 2008, 2009, which were really rough. But even after that, you had a few years where banks were really afraid to lend. And I mean, probably
Yeah.
rightfully so. So they made the rules so onerous that it was just hard to qualify people. And they actually adjusted that because they realized, okay, we're in a different market now. People need to buy homes. So they loosened up some of those rules. But I avoided a lot of that pain. And then we had always planned on moving back. We said, let's live there for 5 years. And we kind of stuck to that. But I came back and much like my trip to Hawaii, I did not have like a job lined up or think, I'm like, we'll figure it out when we get there. And that's kind of what we did. So when we were planning, it was like, go back to Chicago where I have a lot of relationships, a lot of connections, but we're also a blank slate. Like we were such a blank slate that I had to, my driver's license had expired. Not like expired, like I got to go pay the fee and do the eye test.
Sure.
I had to go like I was 16 and do the driving test.
Yep.
Um, and the lady's like, yeah, we can just drive around a little bit. I'm pretty sure you know how to drive. She was pretty forgiving.
Yeah.
Um, but we were blank slates. And so we had a little bit of family, a few friends in the Portland metropolitan area. And they said, if you're coming back, you gotta check this out.
Mm.
So we stayed at my aunt and uncle's place near the St. John's Bridge for probably 2 months while we got established. And we absolutely loved the area. But that did mean that I had to start a relationship based business with literally a handful of relationships, friends and family. So I didn't
Mm.
really know anyone. So I kind of had to start the business over. But I had done that in Chicago. I'd grown my business. So I kind of knew what the steps were. And so that's what I started doing. The initial job I got because a lot of the rules had changed, as we just kind of mentioned.
I was
And I
gonna
was like,
say, yeah.
I don't want to jump into this because you know how it goes. If we get a client and we pre-approve them, I want to know with 99 point whatever percent certainty that they're good to go, right? And I'm like, if all these rules have changed, so I worked under a lady, I worked on like a team for about a year, and it was great, high volume. So I learned, I kind of freshened up on everything. I also realized I'm not going to grow my own business on this
Mm.
team. Like I'm not really in control of my destiny. So then I started originating on my own at that point. But what brought us back was we said we're going to live there for about 5 years, and we lived there for about 5 years and came back. Yeah.
Wow. So let's talk a little bit more about the mortgage industry. Like, in my opinion, it's it is an awesome industry to be in.
Mhm.
And but it takes a certain mindset because to me, mortgages, real estate, realtors, you still have to have, in my opinion, the small business or the entrepreneurship mentality, meaning you control your own destiny, and the more you put into it, the more you're going to get back. So,
Yeah.
how do you agree with me with that? And how do you keep with that mentality? Like, what drives you?
I do agree with that. And I would say in our world, there are people that work at retail banks. Say you work at one of the big box bank stores, you drive 2 blocks and you'll see one of them, and they will have kind of built-in business or referrals from all the clients that go there. Um, the way our business and a lot of loan officers are structured are they really are their own business. You generate your own leads. If you don't generate your own leads, you don't make any money. You might have a umbrella company that handles HR and payroll and things like that, but the business building and the lead generation and all of those things is 100% on you. So
Hmm.
we really are our own small businesses, and we should be spending a fair bit of our time, marketing people, deepening relationships, doing those things, because that is our bread and butter. So
Yeah.
when I initially joined, having no relationships, I worked inside a real estate office as a lender. So that you have access to people,
Oh,
probably
okay.
about 20 different lenders. And I was there for a couple of years. But I developed a lot of deep relationships. And then I kind of went out on my own, and I was able to maintain those relationships and grow some other relationships. And the other part about it is, if probably like any business, if you treat your past clients well, they're gonna they're gonna come back. And one thing that's unique about our industry is that with the rate fluctuations, obviously purchase business, you're working with someone for the first time, rates drop, you're pretty much going to have a repeat customer kind of right there. So we'll have times when rates are low and we're doing a bunch of refinances, and that's typically, you can get new refinances, but for me, that's the bulk of that has been past clients that I worked with, that were just called me up, or I called them and said, it's time to do this, here's how much you're saving, and
Yeah.
moving forward. So I think that's kind of cool, because not a lot of other industries have it where something shifts. When rates go down, people don't necessarily say, oh, it's time to buy a new house. They might, because it's more attractive, but in our world, people, yeah,
Yeah.
it's it
No,
also
dude.
leads to the ebb and flow, the kind of feast or famine part of that as well. When rates go up, refinances kind of dry up, things like that. But yeah, that's the other part of the business. Being essentially a small business, is you got to plan for, when the times are good, you got to plan for when they're going to be leaner, because those times always come. And when you're in the middle of it, it feels like human nature, but you're like, maybe not that this is never going to end, but you don't, you're not really thinking about like, oh, this is going to, but you've been through a cycle or two like those. You go, hey, these are good times.
Yeah.
Let's save our pennies, so we can kind of weather the bad times.
Yeah.
I
Right.
think any small business, has to do that. But
Yeah.
ours especially, because it can be a rather large fluctuation.
Yeah.
Um, yeah,
Yeah. Ride the wave, man. That was always the thing, is gotta
yeah,
ride the
yeah,
wave.
yeah.
And you've been with how many companies have you been with? Mortgage companies. It's like, by the way, for people who don't know, and there might be people listening who don't understand
Yeah.
like the mortgage industry, like it's like the NBA. Like people
Yeah,
they go from team to team to team, and people can join different teams all the time. So how many mortgage companies have you been with?
yeah, we have a very fluid workforce, don't we, as far as where
Hmm.
where people go. We'll just use the recent history, since I've been in Chicago probably a couple. Um, but when I moved back here, I was on that team for about a year, and then decided it was time to do my own thing. And then
Yep.
I was the loan officer assigned to a real estate office. I did that for about 3 years, and then you and I worked at Gateway together. I was there for a little over 5 years. And
Oh,
then,
wow. I didn't know it was that long, dude.
yeah, yeah. And the current place, it's about 2.5 years. The reason I left Gateway, although I'm very happy with where I'm at, is that they started shutting down offices because of
Yeah.
market fluctuations,
Yeah.
and waning demand for mortgages. And so, or else I probably would have stayed. I think I tend to be a little bit, I don't jump ship, you know, if there's a reason I'm on a team, but I want to be on my own, building my own business, right?
Yeah,
Or I want to build my own business, but I want to do it where there's more advantage. There's always because there are people will sort of dangle bright and shiny objects at you to get you to move over. Come over here.
sure.
We'll give you a sign-on bonus, or we'll do this, we'll do that. Well, if you go over to a mediocre company, even though it's a lot of it is you know, our own doing as far as our businesses, that does have an impact, right? So I'm always like, so I get a nice little bonus or whatever the incentive is, but I'm still at a company that might not like meet my needs in the future. So I
Well,
never really looked at that stuff too deeply. When the recruiters start calling, because I'm like,
yeah.
I'm happy here. It fits all my needs. Everything's working. So yeah, about coming up on 2.5 years at Nexa.
Yeah. Yeah, that's the one thing I noticed about you when we met is, you were always cool. And let's face it, you and I were probably one of the oldest people in the office. Everybody else
Yeah,
was in their
yeah,
like 30s.
yeah,
Um, but while they were out doing their thing, and I I don't want it to seem like that's not a good. Like what they were
right,
doing was fine. It worked for them.
yeah,
What you were doing, I paid attention to. And it was, I am going to call, and you told me this, man. You were awesome, man. For real. You're like,
thank you.
Ben, make 20 calls a day.
Yeah,
Make 20 calls a day. And even if you don't or have what was it? No, you were like, set a goal of 20 calls a day. And if you don't make
right,
it, that's fine. But what you want to do is have goals and connect.
yeah,
Even if it doesn't lead to anywhere, it doesn't lead to anything, is just be consistent because that's the mindset that kind of changes. It gives you, when you're self-employed, when you're a small business owner, you know, you're in charge of yourself. You
yeah,
don't
yeah.
have that structure. So that keeps that structure together. Um, do you think that the lending or lenders now are overutilizing like social media and
Yeah.
things like that, and where you kind of do it old school? I don't want to call it old school, but it is. It's like old school selling or old school connecting.
Well, so my take on social media is that you need to have a presence. It's important, however that looks these days. Um, and how I plug that in is if I have a presence on social media and then I'm growing my relationships organically and they're referring me to people, I always say the very first interview they have is they check you out on social media.
Ah,
Like, back in the day, people would go talk to a realtor and they would show them houses. Now, what do? They go on whatever website and they see the pictures and they're kind of interviewing the house right then, going, "Oh, this looks like it has promise." Now, what they see when they actually go out there might be different than what they expected, but they get a really good. So they're choosing and kind of selecting from there. And then I feel like someone refers a lender. I don't know about you, but most people they're gonna Google or they're gonna look them up on social media and see some of their content. So for me, social media is a nice complement. It's
mm,
it's that missing piece because especially with the younger generation, if you say, "Hey, work with this guy Todd," you get highly recommended, and they go, "Okay, let's go check him out," and there's just nothing. It's just a void that someone else can fill. Oh, hey, this guy has helpful YouTube videos on this, or I love this guy's, you know, Instagram reels, and so I try to do that stuff, but that is a compliment to the old school calling, meeting people, getting out there, because I find that's the best way to still to make a connection.
yeah, bro. And you were so good at it, man. I remember just watching you, and you were just so cool with it. And the fact that you would teach, you'd have these lunch and learns, and you would do
Yeah.
that. Like to me, that's connecting differently. You
Hmm.
know what I mean? But it's
Yeah.
organic because you're not coming across as I'm going to be over the top salesy.
Right.
I'm here to teach you. I'm here to help
Yeah.
you learn about the mortgage industry, which I admire that, man, for real.
Well, the lunch and learns, they're kind of evolving because I think with social media and the prevalence of Zoom after during the pandemic, whatever else, it's harder to get people, face to face. So sometimes we have to do a hybrid where it's in person and Zoom. Sometimes we'll do Zoom. You kind of have to meet the client with where they're at. I still love the old school lunch and learns.
Yeah.
Because usually, they're fun. So you either learn something or you have a great time connecting or both. Um, but I have found it's harder to get the number of people to a lunch and learn just for that reason. Everyone's like, can't we just Zoom? And it's like, we can Zoom, of course, but part of this is that, you're trying to, shake a hand and meet people that you might work with.
Sure. I love
So
that.
it's evolving, but
Are you still doing those or
yeah, I do them. I try to do them about one every 90 days. And like I said, the big struggle is you don't get as many people. And I'm assuming, I mean, where the market's slower now, so that also means that people aren't doing as much. But
mm-hmm.
I also think that a lot of people just kind of got used to having meetings at their home, which obviously is super convenient. But for me,
Yeah.
it's not a replacement for the face to face. Yeah, yeah.
100%. All right, let's shift to today and the market today. I know it's a big topic that you want to talk about. So, if you had to put today into a word in the
Mhm.
mortgage market, what would that word be?
Well, what would the word be? I mean, probably the most concise thing is it's slow. And it's
Okay.
slow because rates, probably going on about 3 years ago, rates went from record lows and here's the thing, we're not near our record highs. We were just all used to rates that were in the 2 and 3%. So now we're in the mid sixes, sometimes high sixes. And so when the rate's gone up 2.5 times and people's monthly payments have gone up that much, it puts a damper on things. So I think because of a lot of my marketing efforts and the organic way I grew my business, I've been fairly consistent. I've been fairly, steady, which is great. But in general, I think there's just a lot fewer transactions. And my take is that a lot of the first-time home buyers, even the repeat buyers that have a lower interest rate, they're just not making the move. They're waiting for rates to drop, or they're waiting for housing prices to drop. Um, I can see where people are waiting for rates to drop, although it's slightly problematic, but I understand there people waiting for housing prices to drop. They might, but they've gone down like 1 or 2%. But if we recall, in the last 5 years, they've gone up what 20%, as an aggregate, maybe
Yeah.
more in certain areas. So there's still the house price is high because that's typically what happens is when rates go down. I don't think there's a typical anymore, but what happened in the past was rates would go down, and then housing prices would also go down to sort of make it more affordable to reach the supply and demand. So the demand says we can afford this. So if you want to sell your house, and now 2007, 2008, those are sort of exceptional circumstances where we were way overinflated, but
hmm
housing prices probably went down 30%, 40% in some areas. That makes it a lot more affordable for people. So now what we have is a higher rate environment and housing prices that have kind of stabilized and maybe notched down just ever so much. Um, the crystal ball, what's going to happen in the future is problematic because people say, I'm going to wait till housing prices go down. I'm going to wait till rates go down. That in and of itself, those thoughts, I mean, taken by themselves, I get where people's heads are at. The problem is with all the people that are kind of on the sidelines waiting for that is when one of those things happens, we'll probably see a pretty good uptick in demand. And that's obviously only going to push the prices up higher. So I would say watch, but if you're really wanting to buy a house, I think it's a great time because there is more inventory. There is more room for sellers to pay closing costs or get a better deal. Obviously, if rates drop and there's a bunch of buyers, those prices are going to kind of start to come down. So,
I mean, and being in the industry as long as you and I have, we know that yeah, there might be ups and downs in the market, but it's
yeah,
always going to go up. I mean, eventually the graphs all show you that. Like there's going to be
yeah,
dips, there's going to be this, but they're so small because it's always going to keep creeping up. And I agree with you, man. Like if you're, to me, it's like you are, and it's, I understand people want to make payments and want to make it affordable for themselves, but
Yeah,
it's almost like they're not seeing the future of
right,
refinance and how amazing refinance can be. If you can afford a house at 6%, let's just wait. Let's just say it goes down in 5 years and it goes to 4% and you refinance. Imagine what
right.
that can do for you at that point.
Yeah, yeah.
You know?
Well, to your point, this is what I think is that most people, as far as analyzing risk and making decisions, it's very hard to say, how does this decision affect me in 5 or 10 years? Right? It's
Right.
just people, and I get it. We all have a lot of busy lives, and there's a lot of stressors. So you might be like, how is this going to impact me next month or 6 months from now, right? But if you look at as you mentioned, in the real estate industry, you take any 5 or 10 year period, especially any 10 year period, and you say to someone, "Are you happy that you bought the house?"
Mm-hmm.
100% of people are. Now they might have seen, if you bought in 2006, you probably saw a dip in your values, but if you held on till 2016, it was still worth a lot more than it was in 2006.
For
So
sure.
it's this great investment. Obviously, it's your home, and owning your own home has a lot of its own intrinsic value, but
Yeah.
it's a phenomenal investment. I always find that, like, I think the stat, and I looked it up recently, but it said that people that owned a home, homeowners had a net worth of around like 380,000, and people that rented had a net worth of, I think, $12,000. So
Yeah.
obviously that's an average over the nation, but because you get into that home, and maybe you're making other decisions financially because you're a homeowner, but also that appreciation can be really significant. And again, if you're looking at it going, what's this going to do in 2 years? That's, it may or may not go up, but if you look at it in a 5 or 10 year time span, people are always very happy that they bought a home.
100%. And
It's
I
just
just
getting
can't,
them into that time frame.
yeah, I mean, and I just can't stress enough how refinance can change your life. I mean,
Right.
if even if you get into it now, I mean, at least you're into it and you're a homeowner and you have
Yeah.
that freedom of home ownership. And then,
Yeah, you've locked in your payment. It's only going to go
yep,
down with the
yep,
refinance, and you've locked in the equity. So the values go up, you're locked in. Yeah. And and like you said, you refinance after a couple of years, you get rid of mortgage insurance, which is something you have to pay if you don't put 20% down. You reduce your payment. I've had so many people that used down payment assistance, which is they're bringing in no down payment. But the mortgage insurance can be higher than that. And also the rate's a little bit higher because of the the they're putting zero down, so they have less skin in the game. Those same folks come after a few years, they refinance with a lower rate to get rid of mortgage insurance. You see these huge, you see four, five, six, $700 swings downward in their payment. Like it is significant, and that might be
wow,
even, yeah, yeah. So, but yeah, it's that initial step, and we never want to get people that are can't afford the payment, right? And I want to be really, because the price of everything has gone up. So if someone says, I just can't afford it, obviously we respect that and we want to honor that. It's more the people that feel like, oh, it's daunting. There's some risk involved. My payment's going to be higher. I get all that, but I still think it's worth the plunge. That's the big thing, is that it does feel a little scarier to buy a house these days with these payments, but if you can afford it, you're going to be really happy that you did that. So,
oh, dude, 100%. And with
yeah,
rent prices the way they are, if the rent's only going to go up to, I'm just telling you,
yeah,
because there's such a need for the inventory is so low um, that rent's going to keep going up. And to me, it's just you're throwing that money away. So why not? Why not? In my opinion, it's an investment. I mean, your home is an investment, and it's
right,
it's
right.
it's kind of difficult to get that message across
Yeah,
initially,
yeah.
especially the first time home buyers. But it really isn't. It's an investment. It's an investment into your future for sure, in my opinion.
Well, and these days, not to get too much into the weeds about, the particulars of the programs, but if you have a seller that's willing to work a little bit on the price, and there are sellers that are doing that because houses are staying on the markets longer,
Hmm.
um, they can often pay for like a temporary buy down, and you can take a rate that's at 6.5 and you can get it down to 4.5 or even 3.5 and have the seller pay those costs. Now that's only temporary. It's only going to last for 2 or 3 years, but that gives you a lot of runway to watch the rates as they come down. But that's
Yeah.
a way to sort of ease into buying a home as well. So we do have a few different tools that we can use to make make it feel a little bit less daunting to get into a home.
Yeah. Um, can you just kind of explain what a buy down means for people who don't know what that is?
Yeah, and there's two different types. There's a permanent buy down, which is it's called discount points. You can pay a fee upfront and get a lower interest rate. The traditional wisdom, although it's better these days, but it would always be like 1 point, which is 1% of your loan amount. So if someone had a $300,000 loan, it would be $3,000. You can buy down your rate between 1/4 and 1/2 of a point. So instead of being at 6.5, you'd be at 6. And that's the lifetime of the loan, right? So
Okay.
rates don't do anything for 5 years. I hope they get lower before then. But just for example, you don't have to worry about that rate going up. It's permanently bought down to that lower level. And what I was saying is sometimes with sellers, the sellers can pay for those fees. So those monies don't come out of pocket. So if there's a house where you have a motivated seller that's willing to chip in a little bit, we will have the seller. And I've done a lot of those where the sellers will say, we'll contribute X amount of dollars towards the buy down. The other one is a temporary buy down, and that looks a little bit like steps. There's a 1-0 buy down, 2-1-0 buy down. These are all the number of years. So on a 2-1-0 buy down, let's say the rate's 6.5. First year, you'd buy it down 2 points to 4.5. It stays at that level for 1 year. Next year, you go to 5.5. Stays at that for one year. And then the third year, you get the fully indexed rate. So it's less expensive to get, it's more impactful because you're buying it down further, less expensive to get a temporary buy down with the obvious caveat that you're only going to have that really low rate for a year and then a better rate for a second year. And you can even go 3 years. So you can take 6.5 and get down to 3.5%,
Oh,
It
wow.
can get sort of expensive, but the effect on the monthly payments is pretty profound.
Yeah.
Yeah.
Um, I would like you to give advice, okay? Give advice to the new lender, the lender who's just getting into the business. What's one piece of advice you're going to give them?
I mean, I think the first thing I would do is either find a good mentor if you're in office with other loan officers, or seek someone out, ask, hey, who's a really good lender in the area, and see if they'll take you under their wing. Not even like part of their team, but just that they'll coach you up on things, or hire a coach if you can afford it, but something to get you up because there's so much to know in our industry. So if you're brand new to lending, you're going to spend a lot of your time just learning the programs and the guidelines, and there's just so much to know. But you should have that dialed in so that you can spend a lot of your time marketing, and that same person can show you. Now, you might work for an organization that has that built in. Oftentimes they don't. I think most of the places that we've worked for, you came in and it's like you're generating your own business, however you do it.
Hmm.
There might be a resource there to answer questions about things, but there's not someone that's guiding you. So I think that person that's guiding you initially is going to save you a lot of time and effort if you try to figure it out just via trial and error. So I would say get a good mentor. And if there's anyone that is going to become a new lender and they need tips or pro hacks to it, I'm more than willing to share, what I know as well. So
Yeah. Yeah. And Todd, you are legit for sure. Okay. Give the advice to the seasoned lender who is struggling right now.
well, what I would say to that person is hang in there, because what happens is, especially loan officers that start and they're in a good market, let's say they're in a low interest rate environment, they can tend to do pretty well because there's just a lot of activity. So they can get busy. And if they haven't developed those relationships, they'll be busy, but then rates go up and there's no more refinances. There's no more just kind of things that are kind of not falling in their lap, but that come kind of easily. It's a
Hmm.
lot more hard earned. So I would say if you're an experienced loan officer that's been doing for a while, just deepen the relationships that you have So even when people are slow, I still try to make those 20 calls a day. I reach out to people. They might say, hey, I have nothing going on. I want to be front and center. I try to be really good about keeping in contact with my past clients. And so you kind of keep going. And then when market conditions or something shifts, you are well positioned. What happens a lot of times with the newer LOs or people is that they just don't have enough runway for those slow times. So they'll go back to the job that they have, or they'll get a part-time job. And then there's nothing wrong with getting a part-time job if you need to. I have found it hard for me to kind of serve two masters. Like,
Yep.
oh, I'm doing this 20 hours a week. I can't really focus on give the energy that I need for the mortgage business. So hang in there. If you have relationships, keep in touch, keep deepening those relationships. Because that's the thing about social media is everyone's like, I have this huge presence on social media. And I'm not saying that's a bad thing. I think it's an essential thing to have a presence there. But if you're forgetting about core relationship building, which is meeting people or having a great phone conversation or having lunch and learns or, the annual picnic for your clients or those sort of things, I feel like you're missing the boat because those are the things that people remember. They'll get familiar with you on social media. They'll know that you're still in business. But if you really want to, go a little bit deeper, you gotta keep it organic, for me at least, and just keep those relationships fresh and just hang in there, as we say.
Yeah, I agree.
Yeah.
All right, now give advice for the people looking who are in the market. I don't want to say first-time home buyers but just buyers. What would be
Yeah.
advice to people who are like, I want to buy, but I'm on the fence for the rates? Like, what would be your advice to them?
Well, what I would say is if you're able to buy, and even though the payment's higher, if it's something that you can manage, I feel like now is a good time to buy. Can housing prices go down a little bit? Sure, there's always room for housing prices to go down. Are they going to go down a bunch? I don't really think they're going to go down that significantly. So buy now and avoid, because something's going to shift here. Either the Fed's going to start dropping the rates, the prime rate, and that will influence the mortgage markets to drop their rates because they're not directly tied, but they do kind of have an influence on each other. Market conditions will be such that rates will drop, and then that's where we're going to see, I think, an influx of buyers. And then all the deals or paying points to get a temporary buy down or getting a better price in the home, that's probably going to go away if you have an influx of buyers, right? Because the demand's going to kind of spike up. So we don't know when that's going to happen, but at some point it will happen. I'd rather be in my home, just building that equity and getting sort of out of that rat race when it happens. So that's what if you're able to buy, if it's a comfortable monthly payment that you can afford, I would say it's a great time to buy.
Awesome. Do you have advice for sellers or not? Is that a different animal? Like, do you have advice for them? If you don't, that's not a big deal.
I don't, well, probably less so for sellers, but what I would say is sometimes when you have a house and it's been on the market for a while, everyone says lower the price. If it's priced right, it's going to sell. And that is true, right? A lower price will bring more interest. But what you can do, let's say someone's going to reduce the price of their house by $10,000. It's been on the market for X amount of days. We're not getting, let's do a price reduction. What you can do with those funds instead is say, let's do a temporary or a permanent buy down. And you can make a much more attractive payment for, obviously you have to market it that you're going to use these funds for a buy down, but that's going to have much bigger impact. Buying down the rate is going to have a much bigger impact than a price reduction.
Oh, I
So
love that idea.
if you're looking at people that are house payment sensitive, which most people are these days, that's going to get you a lot further to a more comfortable monthly payment than just a $10,000 price decrease. Because if you drop the price 10 grand, you might save $80 a month on the mortgage, right? It's $80, but might not move the needle if you have a higher mortgage payment. If you use those to buy down the rate, if you use a temporary buy down, it might save you $500 or $600 a month on the payment. So much more impactful. And I think sellers or maybe sellers agents kind of forget how powerful that tool is. So it's been in the market for a while. They're talking, hey, it's time for a price reduction. Price reduction, or use those funds to buy down your buyer's interest rate.
Dude, I love that.
Yeah.
Todd, it's 2 o'clock your time, bro. This was awesome.
Yeah,
Like, you're
I enjoyed
awesome.
it as well.
One more piece of advice. What advice do you have for the Cubs fans out there dealing with the Cubs losing streak right now?
It's kind of like the same advice I had for experienced loan officers in a down market, which is just hang in there. It only took us from 1908 to 2016 to get the third pennant. Just 108 years.
That's
So
right.
we're used to having down years or down season. Yeah, I mean, unfortunately, I don't follow them as closely because in the Midwest, if you get WGN,
Yeah.
every Cubs game is broadcast. But I knew they were doing pretty well earlier this year, and yeah, they kind of
Yeah, they
cooled it
fell
a little
off.
bit. Yeah,
They lost two to the stupid Cardinals, so let's hope they
yeah.
can get those back.
How are the
Todd,
Brewers doing?
dude, they're killing it, man. Like
Yeah.
they're 2.5 games behind. It's the same crap over and over again.
Is it better to see a Cubs game in Miller Park or in Wrigley Field?
Uh, well, Wrigley's always is awesome.
Yeah.
I'm biased, but but in Milwaukee, man, that it's American Family Field, American
Oh,
Family Field now. But yeah,
see,
Miller
that's how long
Park.
it's
We
been
still
since I
call
lived
it
in the
Miller
Midwest.
Park.
Because
It's
yeah,
like the Sears Tower is always going to be the Sears
yeah,
Tower.
yeah. What you talking about, Willis? Yeah,
But Milwaukee is beautiful. I love that stadium. Um, maybe I'll post a picture right here. That'd be good. We saw the Cubs and Brewers play this year.
yeah.
It was
At
awesome.
American Family.
Yeah, it was
Yeah,
awesome.
yeah.
We'll go to Wrigley again this year, probably. We'll do that. Todd, where can people find you, brother?
Financing by Todd. Just sounds like it sounds 2ds.com. Or you probably put my name in the notes here. You can Google me and my website will pop up as well. But financing by Todd's probably the easiest way to find me.
Awesome. Yeah, and I'll put all that in the show notes, of course. Brother, it's always good catching up with you, man.
Same here. Same
You're
here.
awesome. And I really mean it. Like you were always there to because I came in kind of thinking I knew stuff and um not that I was, whatever, like think I'm better than everybody else, but I thought I knew stuff and you were
Yeah.
there to show me that no, it's different, man. Like you got to have this kind of mindset and just because you've done it before doesn't mean you're going to be successful at it now. So, I really
You might be,
appreciate it.
are you familiar with the term glazing? You might be glazing me. Have you heard
Wait,
that?
no.
This is something from my teenage boys. Glazing is,
I have heard. Hold on. My daughter has said that.
yeah.
What does
It's
that
like
mean?
it means giving someone a compliment.
Oh,
Now, and
yeah.
I don't mean this what you were saying. I'm sure it's all true, but it might just be like kind of fluffing someone up, like kind of we might say like buttering their bread a little bit,
Oh,
glaze. Yeah, yeah.
well, I mean every minute. I mean every part of it,
I
dude.
know.
I mean it. Like I really do. You are awesome, and I really enjoy our friendship, and I'm so glad we still stay in touch and connect, man. It's awesome.
I agree. I agree. I miss you having you out here, but next time I'm in the Midwest, I'll have to come up to Milwaukee and
Dude, that
grab a
would be
beer.
freaking awesome. I'm serious.
I might not drink your Miller Lite, but I'll come up for a beer.
The Miller Extra Light.
That's right. Extra light. It's extra.
It's
It's
extra.
not basic. It's extra.
It's
All right,
extra.
man.
All right,
I
brother.
appreciate. Yeah.
Yes, thank you for listening. Thank you for watching, and we will see you all next time. There you go. That was it. Good job.